What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. So I finished my first 312s, and I was going to post videos, but I just needed to relax and do my thing. But my gosh, the recent news about STOR Capital is like a dagger to my heart. I posted numerous videos stating that I want to get to 200 to 400 shares with these guys, and then they're just killing me inside with the acquisition news that they're going to be acquired. And sure, you're going to get some money per shares and all that, but as a dividend investor, you have to adapt if things change. So these guys are going to be gone eventually, and sure, you're going to get some extra money with that being a shareholder, but at the same time, I need to adapt. And this happens. And I capitalized in the real estate sector. I bought a lot of shares of STOR Capital. I earned a lot of dividend income with these guys. They're going to be no more. So what's going to happen is I have to look at 5 dividend stocks or more dividend stocks or an alternative dividend stock that I'm going to throw that money in. And probably I'm going to throw it in one of these 5 stocks. I don't know if I'm going to distribute it or just throw it, or throw a scatter bomb with that extra money into these 5 dividend stocks. But I need to start brainstorming. And I'm going to show you my 5 dividend stocks that I'm looking at to replace STOR Capital. Either all 5 or one of them or 2 of the 3. It doesn't matter. I just want to show you what I'm looking at. So if you're new to this channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check these stocks out right now. First dividend stock I'm looking at throwing money in potentially is gaming and leisure properties. It's sitting at 48.69. This is a real estate investment trust, obviously focusing on gaming and leisure properties. Dividend yield is 5.79%. PE ratio 21.97. Big deal. Remember, FFO is more important with real estate investment trust. Average volume 2.07 million. The market cap is 12.44 billion US dollars. Year range was 41.81 to 52.87. Day range was 47.42 to 49.01, and its previous close was 47.70. So let's check these guys out. Their portfolio consists of 57 geographically diversified gaming and related facilities and amenities, well positioned across the nation. So it is the first real estate investment trust focused on acquiring real property assets leased to gaming operators. So their portfolio of 57 premier gaming assets is geographically diversified across 17 states. Our tenants include Penn National Gaming, Caesars Entertainment, Boyd Gaming Corporation, Casino Queen, Bally's, and Cordish Companies. So through innovation and proven management team that pioneer the gaming REIT space, we have leveraged a wealth of industry knowledge to deliver consistent year-over-year total shareholder return while enhancing the strength and stability of our diversified portfolio of the premier gaming assets. We expect to grow our portfolio by pursuing opportunities to acquire additional gaming facilities to lease to gaming operators through the triple net lease arrangements. We also anticipate diversifying our portfolio over time by acquiring properties outside the gaming industry. The expertise and industry knowledge of our management team will allow us to secure additional avenues for growth beyond the gaming industry and allow us to pursue other acquisitions that may prove complementary to our existing assets. So that's very popular. A lot of these places, people like to gamble, people like to have fun. This is, people go on vacations and they go to casinos and everything. So I'm going to go over their portfolio and then their revenue and their dividend history. So here's their map and distribution. So here's one over here, the Meadows Racetrack and Casino over here in Ohio. Here's Hollywood Casino Columbus, Hollywood Casino Toledo, the Hollywood Gaming and Mahoning Valley Racecourse. That's very popular. Here's another one, and the Live Casino in Pittsburgh. So they're well diversified, and they have the M Resort in Vegas. They also have the Tropicana Laughlin. Even they're out in Maine, which is pretty crazy. Hollywood Casino Bangor. So Louisiana is pretty big down there too. You probably run into Coach O down there, the casino with his hotties. So let's go over their revenue and dividend history. And check out their revenue since 2015. This is in millions US dollars. 575, 2016, 828, 2017, 971, 2018, 1055, 2019, 1,153, then 2020, 1,153. You can blame the pandemic, and then 2021, 1,216. So slowly it's starting to improve. And with the economy and people freaking out about the economy, these guys are kind of stagnant as a stock price. So it's still pretty attractive right now. It's a little bit down. And, these guys are just blowing up like crazy. So I'm going to go over their dividend history as well. I'm going to start in 2014. It was 52 cents. Then 2015, it cracked 55 cents. And then 2016, it cracked 56 cents, 60 cents. 2017, it cracked 62 to 63 cents. 2018, it cracked 68 cents. 2019, it cracked 70 cents. And you got a little 12-cent here. What a surprise. And then right here, you got 60 cents and then 65 cents. And then, of course, you can blame the pandemic right here. So, that's kind of a given. And then 67 cents. And then they got a little bit of a special dividend right here. And then they cracked 69 cents to 71 cents. So looking down here, during the pandemic, these guys were decent, okay? And then they got hit to 71 cents. So number of dividend increase in the last 5 years is 6. Dividend growth in 5 years is 1.15%. You can blame the pandemic. The dividend yield is 5.79%. So if you bought one share, it's $282 with a payout ratio of 81%. Let's jump to the next dividend stock. Next one I'm looking at potentially putting money in is National Retail Properties. NNN REIT has a dividend yield of 4.99%, a PE ratio of 25.80, average volume 833.79K, market cap 7.80 billion US dollars. Its year range is 39.12 to 48.90. Day range is 43.18 to 44.09, and its previous close is 43.86. So it's not doing too hot against the S&P, and this is pretty attractive. It's very similar to STOR Capital with their portfolio. So I'm going to go over this. NNN is a real estate investment trust and invests primarily in high-quality properties that are subject to long-term NNN leases. It is organized in Maryland with its principal office in Orlando, Florida. As of December 31st, 2019, the company owned 3,118 properties containing 32.5 million square feet. 17.6% of the company's revenue was from its properties in Texas, and 8% of the company's revenue was in properties in Florida. So I'll go over their portfolio very briefly, and then I'll go over to their revenue and dividend history. So here's some of their top tenants. So 138 properties, 4.9% is 7-Eleven. Mr. Car Wash is 121. Camping World is 47. LA Fitness is 30. GPM Investments is 152. D&B, Dave & Buster's, 29. Blend Restaurant Group, Taco Bell and Arby's, 204. AMC Theater, 20. BJ's Wholesale Group is 12. Sunoco is 59. Mavis Tire Express is 133. Bob Evans is 106, which is very good. So you're looking at pandemic-proof and recession-proof type companies. Then AMC, they own 2.8% with 20 theaters. So that's pretty attractive. Now let's go over their revenue and their dividend history. So this is in millions US dollars. 2015, it was 482. 2016, 533. 2017, 584. 2018, 622. 2019, 670. 2020, 660. And then 2021, 726. Now let's check out their dividend history. Let's start in 2010. It was 38 cents. 2011, it was 39 cents. 2012, it was 40 cents. 2013, it was 41 cents. 2014, it was 42 cents. 2015, it's 44 cents. 2016, 46 cents. 2017, 48 cents. 2018, 50 cents. 2019, 52 cents. And then it cracked 53 cents in 22 to 55 cents. So the dividend growth in 5 years is 2.52%. A payout ratio is 68%. Number of dividend increases in the last 5 years is 5. So if you bought one share, you made $220 with a 4.99% dividend yield. I like this one a little bit better than GLPI. GLPI is a little bit more specific, but these guys are so huge, and it's almost like a mirror image of STOR, which I really like about these guys. So this one is a little bit of a higher replacement when it comes to a REIT. Now, I'm going to go over 3 non-REITs. Next one is Ally Financial, sitting at 32.48, dividend yield 3.69%, a PE ratio 4.58, average volume 4.01 million. The market cap is 10.02 billion US dollars. Year range is 31.17 to 56.28. Its day range is 31.60 to 32.62, and its previous close is 32.64. This financial company has done phenomenal, and Warren Buffett has bought these guys. So I did a video on them a few weeks ago. I'm going to just briefly go over them real quick and then go over their revenue and dividend history. So Ally Financial is a bank holding company organized in Delaware and headquartered in Detroit, Michigan. The company provides financial services including car finance, online banking, via direct bank, corporate lending, vehicle insurance, mortgage loans, and an electronic trading platform to trade financial assets. It is one of the largest car finance companies in the U.S., providing car financing and leasing for 4.5 million customers and originating in 1.4 million car loans annually. It is one of the largest banks in the United States by assets and has 2 million depositors. Its electronic trading platform has approximately 350,000 funded accounts via its smart auction online marketplace for auto auctions launched in 2000. The company has sold more than 5 million vehicles, including 270,000 vehicles in 2019. The company was known as GMAC, an acronym for General Motors Acceptance Corporation, until 2010. Let's go over their revenue and dividend history. Financially, they're not doing too bad. So 2015, this is in millions US dollars, 9,539, 2016, 9,835, 2017, 9,866, 2018, 10,466, 2019, 1,618, 2020, 10,780, and then 2021, 10,690. You can blame the pandemic from this, but again, revenue is slowly growing, and these guys are pretty strong. And Warren Buffett owns them, so that's, bonus points right there. He must know what he's doing. Next, let's go to their dividend history. So check this out. 2017, it was 8 cents to 12 cents, then 2018 to 13 cents to 15 cents, then 2019 to 17 cents, then to 2020, 19 cents, then to 2021, 25 cents to 2022 to 30 cents. Wow. Okay. Payout ratio is 15%. Number of dividend increases in the last 5 years is 6. Annualized dividend growth in 5 years is 18.99%. So if you bought one share, you made 120 with a 3.69% dividend yield. And right now, it is 32.48. So pretty solid dividend growth for these guys. Let's check out the next dividend stock. I'm back at it with Wendys. It's sitting at $19.86 per share. Dividend yield 2.52%. A PE ratio of 24.38. Average volume 2.93 million. Market cap 4.23 billion US dollars. Its year range is 1577 to 2448. Day range 1951 to 1988. And its previous close was 1980. These guys are expanding like crazy. I will go over their revenue and their dividend history. This fast food restaurant is doing amazing, and I'm going to show you how these guys are doing. So revenue wise, since they started adding breakfast and they're starting to expand a lot and almost exponentially expanding, here's the revenue in millions US dollars. So 2015, 1,817, 2016, 1,435, 2017, 1,223, 2018, 1,589, 2019, 1,709, 2020, 1,733, and 2021, 1,896. So from 2017, 2018, and 2018 on, these guys have rebounded extremely strong. I'm going to show you their dividend history. So look at 2013. It was 4 cents, 5 cents. In 2014, it was 6 cents. Stagnant a little bit at 6 cents. And then 2017, it hit 7 cents. 2018, it hit 9 cents. Then 2019, it hit 10 cents. Then it hit 12 cents in 2020. Pandemic hit, and then they dropped to 5 cents, 7 cents, to 19. Then they're jumping up to 13 cents. So these guys have rebounded pretty strong. Payout ratio is 66%. Number of dividend increases in the last 5 years is 8. Annualized dividend growth in 5 years is 7.74%. So if you bought one share, you made 50 cents with a 2.52% dividend yield. Now, the dividend yield isn't as high compared to the other ones, but these guys appear to be an excellent dividend growth stock. Let's check out the final dividend stock. The Starbucks is sitting at 91.31 with a 2.15% dividend yield, a PE ratio of 25.67, average volume 7.22 million, Market cap 104.77 billion US dollars. Its year range is 68.39 to 117.80, and its day range was 90.65 to 92.10. And its previous close was 92.22. These guys have done well against the S&P. These guys have numerous stock splits. Their revenue has done phenomenal. And these guys are one of the hottest dividend stocks right now that are down. And they're still beating the S&P somehow. It's amazing how these guys are as a company, and they're expanding like crazy. But now let's go over their dividend history. I'm not going to go over the revenue. The revenue's going like crazy. So I'm not going to really go in depth with that, because these guys are just so strong in a juggernaut stock. I'm going to go over their dividend history. These guys have an extensive stock split history. So 2010, it was 10 cents, 213 cents, 217 cents in 2011. 2012, it was 17 cents. Then 2013, it cracked 21 cents. Then 2014, it cracked 26 cents. Then it cracked 32 cents. And then you see a stock split right here at 26, back to 16 cents, jumping up to 20 cents to 25 cents in 2017. Then 2018, it cracked 30 cents. Then it cracked 36 cents. And then 2019, it cracked 41 cents. And even during the pandemic, 2020 to 2021, it jumped up and it hiked its dividend. In 2022, it's 49 cents. So the payout ratio is 62%. Number of dividend increases in the last 5 years is 5. Annualized dividend growth in 5 years is 13.06. Is phenomenal. So if you bought one share, you made 196 with a 2.15% dividend yield. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Dark Dividend. You guys have a good one. And tell me what 5 dividend stocks are excellent alternatives to STOR capital. And it's terrible to hear the acquisition news, but it is what it is, and you have to adapt as a dividend investor. Take care and have a great